Hi everyone, this is M. Jemima Suganti, Assistant Professor from Department of Commerce CA. We are going to see the subject Corporate Accounting on the topic Issue of Shares, how the company will issue shares, the procedures to be followed by issuing the shares, the entries that a company has to follow with the problems. So we all know that share capital is one of the main source of finance for a company. So that for issuing a shares, the company has to follow the procedures and rules that is given by the Securities Exchange Board of India, that is SEBI. Normally, the company issue the shares in different ways. The first one is for consideration other than cash. The second one is for cash. In general, shares are issued for cash. Issue of shares at different values may be followed by the company at par, at premium, at a discount. At par means if the price required to be paid by the company for the share is equal to the nominal value, it is referred as shares issued at par. Shares issued at a premium if the price required to be paid by the company for the share is more than the nominal value of the share, it is referred as shares issued at premium. If the price required to be paid by the company for the share is less than the nominal value, it is referred as shares issued at discount. So these are the entries to be followed by the company. For every steps, the company has to maintain two entries necessary for the company. First thing is on receiving application money. Second one is allotment. Third one is first call. Fourth one is second call or may the final call. First, on receipt of application money, the entry is bank account data to share application account. The company, after receiving the application money, it will transfer the amount to the share capital account. So second entry is share capital account data to share application account data to share capital account. Third, on rejection of excess application, this entry is followed in case of excess application received. Example, the company issued shares for 10,000 but the public applied for 15,000. In case the company will reject the excess application, so the money entry is share application account data to share capital account. The second thing is on allotment money due and the receipt entry. So here the three things are followed: shares issued at par, shares issued at premium, shares issued at discount. In case if shares are issued at par, the entry is share allotment account data to share capital account. If it is a premium, share allotment account data to share capital account to share premium account or to securities premium account. In case if it is a discount, share allotment account data, share discount account data to share capital account. On receipt of application money, bank account data to share allotment account. The third heading is on receipt of call money. The entry is share first call account data to share capital account. It is a due entry. The next is receipt of first call money, bank account data to share first call account. On making second call, share final call account or second call account data to share capital account. On receipt of second call money, bank account data to share final call account. These are the small problems. Fashion Fabrics Limited issued 1 lakh shares of rupees 10 each on 1st April 2014. The amount payable rupees 2 per application, rupees 3 per allotment, rupees 3 per share on call money. So the entry is on receipt of application money, bank account data to share application account, 1 lakh shares into application money is 2. So 1 lakh into rupees 2 the amount will be 2 lakh. Second entry, for transferring application money to share capital account. Share application account data to share capital account, the same amount is transferred to share capital account. Third, on due entry, that is allotment money due entry, share allotment account data to share capital account. The allotment money is rupees 3. So 1 lakh shares into rupees 3, 3 lakh. Fourth entry is receipt of application money, bank account data to share allotment account. The same amount is transferred, 3 lakh. Next, on receipt of first and final call, share first and final call account data to share capital account. The call money is rupees 5. So 1 lakh into rupees 5 is 5 lakh. On receipt of call money, bank account data to share first and final call, or we can say to share final call account. The amount is 5 lakh is transferred. Let's move on to the second problem. The Full Healthcare Limited has offered to public for subscription 20,000 shares. The face value is rupees 100 each. Rupees 30 on application, rupees 30 on allotment, and balance on call. That is 30 application money, 30 allotment money, that is 60 rupees. So balance on call means balance 40 rupees. Balance on call money. Application were received for 30,000 shares. Application for 5,000 shares were rejected altogether and application money was returned. Remaining applicants were allotted and offered the shares to the shareholders. The excess application money was adjusted towards sum due on allotment. Calls were made and duly received. Make journal entries in the books of the company. So here the pro rata allotment is made. That is, the company issued 20,000 shares but the public applied for 30,000 shares. The excess 10,000 shares, the company adjusted 5,000 shares and rejected 5,000 shares and returned the application money. So let's see the entries to be made by the company. On receipt of application money, bank account data to share application, the company will receive application money for 30,000 rupees. So 30,000 into 30 rupees, 9 lakh. The second entry is share application account data to share capital, to bank, to allotment. We have followed one entry in that for rejection along with pro rata basis. Share application 9 lakh, share capital 6 lakh, to bank 1,50,000, to share allotment 1,50,000. Next, for allotment money due, the entries share allotment account data to share capital account. Next entry, for receiving application bank account data to share allotment 4,50,000. The next is share first and final call account data to share capital. The due entry is rupees 8 lakh. For receiving the first and final call money, bank account data to share first and final call account rupees 8 lakh. The next sum, Luxury Cars Limited issued 1 lakh shares of rupees 10 each at a premium rupees 5. Application 4, allotment 8 including premium, call rupees 3. Application were received for 1 lakh shares. All allotment was made. Make entries. Here we are going to see the problem with the premium. Shares are issued at a premium. So first entry is bank account data to share application. The company have received 1 lakh shares. The application money is rupees 3. Sorry, Application money is rupees 4. So 1 lakh into rupees 4, 4 lakh. For receiving the application money, the company will transfer the money to share capital. So the entry is share capital account data, share application account data to share capital to securities premium. The third entry is due entry, allotment money due entry along with the securities premium. Share allotment account data to share capital account to securities premium. The fourth entry is for receiving allotment money, bank account data to share allotment account, 1 lakh shares into allotment money rupees 8, 8 lakh. The next entry is share first and final call account data to share capital account rupees 3 lakh. It is the due entry. Next, for receiving first and final call money, bank account data to share first and final call rupees 3 lakh. The next model is we are going to see calls in advance. Let us see the example with the problem. India Software Limited offered 50,000 shares of rupees 10 each to the public, 2 on application, 3 allotment, 2 on first and final first call, and the balance as when required. All the shares were applied and duly allotted, but Mukesh, a shareholder holding 200 shares, paid entire balance on allotment. So he paid the balance call money along with the allotment money. So it is referred as calls in advance. So any shareholder can pay their allotment money in along with for the call money. So make entries for the following transactions. The first entry is for receiving application money, bank account data to share application, 50,000 shares into rupees to 1 lakh. Next, for transferring application money to share capital account, share application account data to share capital account, the same amount is 1 lakh rupees transferred to share capital account. The third entry is due entry, allotment. Allotment, share allotment account data to share capital account, 50,000 into rupees 3, 1 lakh 50,000. Then next is bank account data to share allotment. So here the Mukesh paid the call money along with the allotment. So we have to make that entry. 2 calls in advance. Bank account data 1,51,000 to share allotment 1,50,000, calls in advance rupees 1,000. Next, share first call account data to share capital for due entry rupees 1 lakh. Here the calls in advance entry has to be, amount has to be deducted because he had paid the call money along with the allotment. So bank account data, calls in advance account data to share first call account. To share first call account data rupees 1 lakh we have to receive. So we have already received the money in advance. The next sum. The next problem is calls in arrear. ABC Limited issued 20,000 shares of rupees 10 each, 2 on application, 5 including premium, 3 rupees 3 per share on first call and the balance on final call. So all money was received except the first call money on 400 share which was later with the final call. So we are going to see the entries. First entry is bank account data to share application account rupees 40,000, that is 20,000 shares into rupees to 40,000. For transferring the application money to share capital, share application account data to share capital account 40,000. The next entry is allotment entry, due entry. Here the allotment is made along with the premium. Share allotment account data to share capital account data to share capital account to securities premium. For receiving the allotment money, bank account data to share allotment account. Next, for first call, share first call account data to share capital account 40,000. The next entry is bank account data. Bank calls in arrear account data to share first call account. The next entry is bank account data to share final call to calls in arrear. So share final call, we have to receive 40,000 amount. To share calls in arrears, we have not received for rupees 1200 shares. So we have to deduct the amount, should be posted in bank entry. So the bank entry is bank account data 41,200. So that's it with the today's problem. Let us see the other models in next video. Thank you. Let's move on to the another model, forfeiture of shares. So it is one of the important model in issue of shares. So what is forfeiture of shares? It is the termination of membership by the company. So when the termination is made, when any shareholder fails to pay the allotment or the call money, either first call, second call or final call money. If he fails to pay that money, the company will break the relationship with its shareholder, that is termination of membership. Otherwise, we can say that cancellation of shares by the company in case if the shareholder fails to pay the call money. So this is known as forfeiture of shares. The company will get the shares from the shareholders, and the next is he again reissue the shares, that is he reissue the shares to public. That procedure is known as reissue of shares. So let's see the example with the problem. So X company limited forfeited 200 shares of rupees 10 each, fully called up, on which 7 have been received and final call 3 remains unpaid. These shares were later reissued on rupees 8 per share, fully paid up. Make entry for recording the forfeiture and reissue of shares. The forfeiture of shares is done in two ways. One method is fully forfeited of shares. Second one is partly forfeiture of shares. Fully forfeited shares means if the company forfeited 200 shares, the same 200 shares is reissued. It is known as fully reissue of shares. The second thing is if the company forfeited 200 shares but it have only reissued 100 or maybe 150, any number less than the 200 shares, it is referred as partly reissue of shares. So let's move on to the entries. So the first entry is for forfeiture entry. Share capital account data to share forfeiture account to share final call account. Share capital account rupees 2000, that is the company didn't receive money for 200 shares and the face value is rupees 10 2000. To share final call, that is for 200 shares into final call money rupees 3 600. The balance amount is transferred to share forfeited account. The next is reissue of shares. The entry is bank account data, share forfeited account data to share capital account. So first we should put the amount in share capital, that is 200 shares were reissued. So it is the fully reissue model at a face value of rupees 10. So the same amount share capital rupees 2000. In bank, the company have reissued at a rupees of rupees 8. So 200 into rupees 8, 1600. The balance is share forfeited, 400 amount is transferred. Next, capital reserve entry, that is after forfeiting and reissuing of shares, the amount is transferred to capital reserve account. So the entry is share forfeited account data to capital reserve. The amount is 1000. So how the 1000 is came here? In first entry, share forfeited, the amount is 1400. In second reissue entry, share forfeited, the amount is 400. So it is the fully reissue model. So we can directly detect the two forfeited entry amount. So 1400 minus 400. So the balance amount is rupees 1000 is transferred to the capital reserve account. So that's it with today's model. Let's see the various model in next video. Thank you for listening. Thank you.